Hi, this is Dave with Market Trading Concepts. It's Monday, January the 30th, 2012. I just wanted to highlight a trade that I did today. It wasn't a big trade. I was using about $1,000 worth of equity, $1,000 worth of in terms of my position size. I went long on three contracts of the option contracts on the Dow. The expiration date was for February. So it was just a small directional trade based on the Dow index and using the DIA or the diamonds as the instrument of choice. So I was using about $1,000 in total. That was my total risk on the option. My stop loss obviously would have been less than half of that. So this was just a day trade using the option. I booked about $127.54 of profit, or just 12.5%, which isn't too bad for a day trade. So I'm going to highlight the trade. I wanted to share this trade with specifically with my meetup group. I had a meetup just this past weekend, yesterday, on Sunday the 29th, and the group and I discussed basically our biases on the market. A lot of people at the group felt that the market was a little bit toppy and was due basically to top out and at some point to roll over and get crushed. So I just wanted to highlight some of my ideas further to our conversation on that, and that actually may come to pass. It's hard to say, but as a trader, you're just trying to trade what's in front of you, and capture the movements and the moves down and the bounces that you see in front of you. Depending on the time frame that you're looking at, which is very important. So let's take a look at this trade. In terms of the trade itself. So in a video that I produced the other weekend, I think around the January the 20th or the 21st, I can't remember the exact date, I was looking at a weekly chart based on a setup that I use called the Darvis squeeze, where we basically have a long signal and everything is still intact. We did hit resistance and we were due for a pullback. So on that basis, fast forward to this morning, market opened and started to sell off. So I'm using a technique that I use often, multi-time frame analysis. It's pretty common. A lot of traders who have been trading for a while are familiar with the approach. So basically what I'm looking at here, daily chart, I'm looking at a 60-minute chart, a 15-minute chart, and a 5-minute chart. Now, the reason for this is just to keep in context the bigger time frame. So on the weekly chart, everything's looking bullish. So now I've got a daily chart, and on this chart, what I'm looking at is I have an 18 period and a 21 period moving average. This is kind of these are moving averages that I use as kind of line in the sand between long and short, but they also provide good support and resistance on a dynamic basis. So basically what I was looking at, I've got some simple, well, not simple, but exponential moving averages here. Basically a 20 period, 21 period moving average. I have a level here that I've determined from another chart as a breakout level, but you can see there's a lot of congestion around this area. Once we actually cleanly broke above this level, we didn't really look back for a number of days. So I've been bullish for quite a while back in this area here, and when we had this congestion, let me just grab a pencil. When we had this congestion in here, I was basically looking for a pullback, which we got here on this day, but I was even watching this intraday and I missed this pullback. That's pretty typical of a strong day. What I was really looking for was I was looking for a pullback. I was looking to actually kind of slip through the moving average and, maybe even close below it, not necessarily close below it, but slip below it, close at it, and then look for strength on the way back up. Now, I missed this. I was actually watching it as it happened, but the price just kind of slipped down, pulled all the way back up, and it didn't really come back down to what I would call this safe entry level. So, I mean, I missed a significant move here. It broke above this, it came back up. So what I was looking for was the next pullback to basically these moving averages. So we got that today when we opened up. Everything was looking really bearish. If you look at the 60-minute chart, price was trading below its 21 period moving average, and it was going lower. You know, you were getting these bounces and it was going lower for the most part. And this is a trending indicator I use. These are the same on all charts. You can see on the daily chart it's very bullish, but on the intraday charts they had rolled over and they were signaling weakness. So basically what happened today is when I saw this level, I was looking somewhere between 12,470 and 12,503. Now these are the Dow futures, but I was using this as a proxy for trading the diamonds, trading options on the diamonds. So they typically move together, but I find that the futures they move a little bit cleaner in terms of their price action because they trade overnight, and the charting's just a little bit cleaner in my experience. So I mean, we knew we had resistance around the 12,800 level. We knew that from an analysis on our other chart, and you can see this candle closed, significantly off of its highs. So there's a potential rollover point or a potential reversal signal. But we're not trying to short because we're in an uptrend. We're in an uptrend, so we're looking to buy pullbacks in this instance. So today we got the pullback here, and what I did was I drilled down to a 5-minute chart. Let me just grab one of my tools here. I was looking at a 5-minute chart, and I was looking for a reversal signal because I knew that I had hit the level that I was interested in. I was actually interested in two levels. I was interested in this level around here, but I was also interested in this 12,377 level, and I was willing to buy here, wait till it pulled back even to this level, buy a little bit more, and with the expectation that it would push off and move higher. So I established an initial entry at this level here. Looking at a 5-minute chart, you can see where this vertical line is. I was looking for signs of strength, and when we saw this push down here, I marked this level at about 12,519. I already knew roughly where I was looking at getting in here, somewhere around this level, and it's really hard to pinpoint it exactly, but somewhere in between these two moving averages, or an actual touch of it, and looking to buy it as it's kind of moving off of that level. So on the 5-minute chart, the 5-minute chart was still bearish. We still had price below its 21 period moving average, and when I saw the first poke above the 21 period moving average, at this point here, I bought the options that I highlighted at the beginning of this video. So there was my entry point. Now, what ended up happening was we had a move below. Let me just clear this off the screen. So we had a move below this level, and it started going lower, and at one point I was obviously down on the position, and then we came back up, and you can see that this level was an area of contention. We had a lot of congestion around this level. The safer entry would have been to wait until this 5-minute chart here. That is one big marker. To wait for this 5-minute chart here to roll back up positive. See, when it went from red to blue, that was a sign of strength. And at the same time, you can see you also had close to this level, but you had the price penetrate the 21 period moving average, and it started showing signs of strength. Closing above this 20 period moving average was the potential reversal area. So I felt comfortable in this area based on my determination on the daily chart, the major level, recognizing that we're in an uptrend on the larger time frame, wanting to buy this pullback, and using the smaller time frame in order to better pinpoint the entry. So what ended up happening was this would have been the safer entry. Instead of, let me just clear this off again. Instead of entering the position while the 5-minute chart was still negative here, I had basically the same entry as I would have had, but I wouldn't have had to take this little bit of heat. It just kind of helped me pinpoint it, or it would have helped me pinpoint it better if I would have entered close to the same level, but as it was going higher. Finding support on the larger time frame, and then this rolling back up to the high side, and closing above its 21 period moving average. And then, you can see it congested around this area, it pulled away, it tested it a few times, tested it, until it ultimately kind of moved higher here off of that level. And you can see that we, on the 5-minute chart at least, we entered into, an uptrend. Now, I closed the position out at the end of the day, somewhere around, somewhere in this area here. At the end of the day, I closed it out. As you saw at the beginning of the video, I booked about 12.5% profit on the trade, which percentage-wise is pretty good. I mean, I usually look for 20% or more in options, but if I'm only in the position as a day trade, I'm not going to spit at 10%, 12%. That's just fantastic for one day. So I decided to close the trade out because the risk here was that, we had this potential accumulation here. We had the pullback that I was looking for, and it started to move higher. And two things are going to happen, which sounds pretty basic. But it could, continue moving higher, and I could look back and say, oh man, I could have made so much money. It doesn't really matter. I managed the trade properly. I booked my profits. And I'm totally okay with that. I'm not going to cry over spilt milk if it goes higher. But the other thing that could happen is we could get another retest of this moving average, and it could do one of these things, and it could come back to some of these more key levels or these price congestion areas, and then ultimately move higher again. Now, if it does do that, I'll be looking for a second entry opportunity, looking for maybe a longer term swing trade off of these levels somewhere in here using the same techniques, where I will wait for the pullback and then wait for signs of strength and hope that these signs of strength in the 5-minute, let's say the 15-minute or the 60-minute or a combination of them, ultimately hold and move higher. Now you can get short-term signs of strength where it will hold and then ultimately roll back to the low side, and then you could get a break of this level. And that's really a risk management, a trade management aspect that you just really need to manage and say, okay, is this a good trade? Am I at the safe entry? And am I managing my risk? If I have to take a stop out because it goes lower than I expected it to, that has to be considered before you actually enter the trade. So that's something I just wanted to highlight. I hope the members of the meetup group have a chance to look at this and understand some of the things that I was trying to explain in terms of I have a long bias, the reasons why I have a long bias on this market right now until the conditions change. And some of those conditions could be, let me just clear off the screen here. Some of these conditions could be, for example, I'm going to switch up the pen color as well. If we actually get a couple of bars closing below this level or below this 21 period moving average, and we start to see bars closing, you get a couple of candlesticks closing below these levels, below this level, then that's going to change my mind on the actual direction of the market. I may not be ready to actually short it because I still have some major bullish indications on the daily, and flipping over, I have some major bullish indications on the weekly chart as well. So I wouldn't necessarily be ready to go short, but I would not be in a position where I'd want to be long either. I'd be more market neutral until we had some more signs of strength and telling me it's time to get long again. Now the reason why I'm interested in these levels is because we've been going up higher, 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 and this is the safe entry level. Sure, you could if you get long over here, you're going to take a lot of heat, and ultimately it could move beyond this level. But the actual risk, in my opinion, isn't worth it. So if you guys have any questions, just send me an email, post something in the meetup group, and maybe this is something we can discuss at the next meeting. And if not, that's cool too. I'll be scheduling another meetup. We have meetups at the end of the last Sunday of every month. So the next meetup will be at the end of February, the last Sunday in February. And everyone's welcome to come out and share ideas. And hopefully we can help each other to grow and prosper into 2012. I hope that helps, and have a fantastic rest of the month.